Hey guys, sorry, Facebook crashed on me, so hopefully you are seeing me again. Apologize for the glitch. So I was just giving you guys my evolution of how I have paid myself over the last 13 years of being an entrepreneur. And one thing I was saying was the first couple years was really only withdrawing money as it was available. I'd say at about year 3, I had a goal in place to take an equity draw every couple weeks, but it wasn't always there. I'd say that 2010 was 6 years into business. I was making that equity draw religiously. And so I was hitting that goal and I had enough income in my business to then withdraw it. About 2 years ago, I decided to transition to my business. It's an LLC, but I decided to file my taxes as an S Corp. And in doing that, you put yourself on a payroll where you actually are a W-2 employee of your own business. And you get paid that way. There are some tax benefits, okay? So I'm going to address all of these different circumstances, okay? So let's get into some of those mechanics. So the first thing in paying yourself is that you have to have a profitable business, and if you're not consistently profitable, it's hard to really stay committed to taking those withdrawals systematically and every couple weeks or every month, right? So in order to do that, you first need to back up before you cut yourself that check, and you do need to set yourself some sales goals and an expense budget, okay? So this is a little bit more of a financial strategy piece of the talk, but you need to have a financial strategy in place so that your business has enough profitability so that you can then pay yourself, okay? So that's step 1. Within that budget, you need to budget for yourself. You need to prioritize yourself. So you need to have a line item that says, Michelle Loretta, equity draw, okay? Start with something simple and manageable. If you're pretty new and you haven't been in the history of paying yourself, start with a couple $100s a week, okay? Or if it's easier to take a lump sum at the end of the month, do it that way. I like to do weekly, and let me tell you why. Because if you say, okay, I'm going to take $100, $200 every single week, it's not a whole lot, but you're in a habit of paying yourself. If you do that on a weekly basis, then you are spending money on yourself before you're spending money on everything else in your business. Because let me tell you, if the money's there, we have a tendency to say, hey, I'm going to invest in my business. I need a new website, or I need a new this, or I need a new computer, right? And we're constantly putting our business before ourselves. You're never going to see profits in your business until you start to line item yourself in the business, okay? So that's number 1. You have to create a financial strategy with yourself as a priority, okay? And then number 2, there's going into the mechanics a little bit more, creating that equity draw for yourself. What you can do is you can actually set up an automatic transfer from your business account to your personal account, $100 a week. Start with something manageable. It may only be $50 a week, okay? If all you can do, because you are, maybe this is your side hustle, maybe this is not a full-time business just yet, it may be draw as it's available. So if you're drawing as it's available, what I would recommend you do is set up what I call a commission structure, where you're taking a percentage of every sale. So let's say you're a wedding planner and the client cuts you a $1,000 check. Set up something that feels comfortable. Maybe it's 20% or 25% of that check, and withdraw it immediately. So the client gives you $1,000 and you say, well, my commission cut is going to be 25%. Withdraw it immediately, $250 from your business to your personal, okay? So that's withdrawing as you have it. I love that method because, again, you pay yourself before you pay anybody else. That model works for any small business owner, solopreneur that I've worked with. I paid myself on that quote-unquote commission type of equity draw for 5 years, from 2010 to 2005. Kelly and I both were on a commission structure. It's not called a commission expense, it's still an equity draw for accounting purposes, but that's a really great way to pay yourself as it's available. And then really, you're only seeing the balance of that. Again, if that money's not there in the account, then you're not spending on other things that maybe you really don't need, okay? As your business grows, I'd say that after you're able to pay yourself consistently like that, whether it's a weekly equity draw that you're taking religiously or every other week, or you pay yourself on the commission model, I would recommend to have a call with your tax accountant and talk to them about filing your taxes as an S Corp, okay? You can stay as an LLC, you can stay as however you're organized. I don't know if you can do it with a sole proprietor, but I know a lot of small business owners, creative business owners, are LLCs. It's a tax designation. You file taxes in a different way, and it may give you some tax savings. I saw tax savings. I've seen it with my clients. So again, once you have a history of profitability and you're paying yourself religiously your draw, talk to your tax accountant about stating your taxes as an S Corp, okay? That S Corp designation allows you then, you will have to put yourself on a payroll. It's easier to plan for your tax planning that way. You don't have to send those quarterly installments, okay? And then at the end of the year, you see some tax savings on your business, okay? So the last piece of my talk with you guys is the emotional side. This is kind of like the flip side of the mechanical side of paying yourself. So real talk here, I think we're martyrs to our business. We start these businesses out of passion. We love doing what we do. We're doing everything for our craft. We want to be successful. We've also been kind of told this lie that we need to lose money for a few years before we see it. What ends up happening when we tell ourselves that like we can't be profitable in our business for the first couple of years is that we aren't building businesses on a financially sustainable model. We're actually creating a business around a losing financial model, and that's not going to work. So if you are in that point in your business, you need to kind of take a switch and say, okay, I'm done. I'm done being in that survival mode. I'm done being a martyr to my business. I come first. I started this business because I wanted flexibility. I wanted to control my pay. I wanted to have a lifestyle, all these things. Well, it's time to go back to that original idea and prioritize yourself. And I kid you not, when I buy something in my business, and you guys have been doing this for 13 years, it's taken me a long time to get to this mentality, but I'd say it was probably about 4 or 5 years ago that every single little pencil that I buy for my business, I'm like, is this pencil more important than paying this 30 cents to myself, right? Than feeding my kids, my family, all that, okay? So I recently bought a computer. It's $1,500 machine. I struggled with that decision because I gotta be honest, I'd rather have $1,500 for myself, you guys. Like $1,500, like I can do a lot with that money. So think about that. Like train yourself to be in the mentality that paying yourself is likely a lot more valuable than some of the decisions that we make with our businesses, okay? There's a balance, you know, there's definitely things you're going to choose to invest in at the right time, okay? So prioritize yourself. It's all about baby steps. Take the first steps. So I want to give you guys an action step today. The first action step that I want you to take, if you are not regularly paying yourself, I want you to set an automatic transfer from your business to your personal account. Make it whatever you feel is going to be manageable so that you aren't running your business cash dry. It could be $50 a week. It could be $100 a week. I talk a lot about weeks because I think that's easier. That's just easier on personal and business finances, okay? It doesn't have to be set up that way though. If you are already paying yourself religiously and regularly, I would consider talking to your tax accountant. It's past April 15th, so now they're going to have a lot more time to talk to you about some of this tax planning stuff that you should be having in place for 2018, filing 2017 taxes. So if you have been good about paying yourself, talk to them about possibly transitioning your tax filing to file as an S Corp, okay? I'm going to answer some questions. One last thing I want to tell you before I get into the questions is if you want some more help with this, I talked a lot about financial planning, and this is not a financial planning class, but I do feel like you need to have some financial plans in place in order to have a profitable business. We talk a lot about that in our courses. We have an Accounting 101 course that walks you through all of, accounting basics, tax basics, how to pay yourself, how to structure those payments, and then how to financially plan to actually see some profits in your business, okay? And that can be found at courses.sageweddingpros.com, okay? So I'll pop those links into the chat box afterwards. So some of your questions here. Facebook is telling me I can apply special filters so you guys can see me all fancy. Oh, I don't see any questions. Do you guys have any questions? I see a lot of your fun faces on here. Did I overwhelm you with thoughts? How are you guys paying yourselves? Do people want to kind of pop in? Is this new information, or maybe you guys can share something that was eye-opening or an aha moment? I think usually the commission structure for taking an equity withdrawal can be a new way to look at it. Again, I love that method. I paid myself that way for 5 years because to me, if the money was there, it was easy for me to kind of budget for it. So Kimberly, you're new, you're not there yet. So what I would recommend is just incorporate something small, and for you it may be taking 10% of every sale for your personal funds. Now listen, for those of you guys that are new and maybe you have a day job and you don't need this money, then to me it's important to set these things up anyways, because if you do plan on leaving your day job at some point, you may not, and you do want to rely on this income, I want you to have a pattern of paying yourself. It's a behavior pattern. So instead of paying yourself, even if you don't need the money, put it into business savings, and then you do have that savings cushion for when you want to leave your business, okay? Were there any other questions before I kind of petered out on Facebook? I was going to pop and see the video and see if there was anything else. You can feel free to email me if you want to ask me something personal. I know this is a really personal topic and people don't always want to share that they're not paying themselves, but like I said, it took me a while. It took me a few years to pay myself regularly, so you're definitely not alone in that. Feel free to email me if you have more questions. I'm at michelle@sageweddingpros.com. You can also find me on sageweddingpros.com. Thanks a lot. Thanks, Melissa, for having me.